Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys. Today we will take a look at the Canadian dollar because on the euro currency our trading plan and tactical setup for our current week has been completed. So you probably saw what has really happened yesterday. So in the comments from Draghi, he said that he has given the hint that the quantitative easing program in Europe will continue. So it was said a bit not quite clear, a bit some disguise was around this statement, but the major idea stands as follows. So the European Central Bank is not ready yet for closing this quantitative easing program, and in some way it will be continued probably after the March of the 2017. And you can see on these comments euro has dropped below 109 area. That is what we have discussed. So yesterday even both targets have been hit. This is the 109.30 minor target, and market also overcome the 109 lows. So currently guys, all that we could do in euro currency, just wait for some pullback that will let us to take the short position. Because our medium-term suggestion is that euro currency will continue dropping to 105, this next destination point. But on the current week, it no big sense right now to talk about it, since everything that we have discussed already has completed. Also, retracement that we have talked about yesterday also has happened before the drop has come. But this, guys, to be honest, this was really very fast. So it just was very short-term spike. I could show you. You probably also already saw these pictures on the daily chart. 4-hour time frame chart. You can see this spike up before drop has happened right at the starting of the comments from the Draghi. It's definitely precisely right to our area. Market hasn't quite reached for probably maybe 10 pips, maybe even less. So as you can see, it's retracement up and immediate drop lowers. Market has taken out 109.30. Now it stands 108.93, standing in the pivot support 1, weekly pivot support 1, and also it's taken out the daily 109 lows. As you can see, this is interesting that it has taken the 109 lows and standing below it. So it's not the wash and rinse, guys. It's just dropping lower. That's why everything stands in our medium-term expectation on the euro currency. But right now, I do not see it's really big idea to talk about the euro currency. We will take a look at it probably on the weekly research. But right now, guys, I would like to show you just very bright setup that we have on the Canadian dollar. But we will start from the crude oil, because as you know, the Canadian dollar is the crude oil currency, and every setup that we see on the crude oil, it has a relation to the Canadian dollar. Sometimes it's very useful because sometimes on the commodities you could see a picture much better than it stands on the forex market, and just give you the clearer view on what's really going on there. So also, guys, I'm a bit surprised that you are so cold, so not interested with our analysis of the gold market, because I just see on the forum that visitors of the gold thread is stand much lower than the forex market. It's really interesting because on the gold market sometimes it's really very just amazing setups we have, especially based on the forecasts that we have on the gold market. And for example, on the current week we've got the double repo buy on the gold market on daily charts, also cool pattern. But somehow Forex Peace Army visitors mostly stand around the forex. It's not gold market, but I think that gold markets also has a lot of stuff that it could offer to us for trading, because right now every retail broker provides the opportunity for trading the gold as well. So anyway, let's talk on the first on the crude on the crude oil. So you can see on the crude oil we have the very bright setup. Take a look. The butterfly has been completed 127 extension, and market has formed perfect double repo sell pattern right at the point of the completion of this butterfly. It means that some minor retracement should happen. So minimum target of the double repo will be 50%, $50 per contract on the crude oil price, because we have cool thrust up, close below 3x3, close above. It's an interesting combination, guys. Take a look. Open with the gap, and on the next day collapse down. Market has closed the gap and closed below 3x3. That has happened yesterday. It's very nice shape of the double repo, how it should be. And as a consequence of this overall combination, some minor retracement could happen to the 50 area. It's also 50% support of the thrust. This minimum target of the double repo. Also, guys, although we expect some minor retracement, we do not think that this will be just major reversal, because if you will take a look at the broader picture, you could see that another butterfly is forming on the crude oil. It's left wing, right wing, and it hasn't been reached yet the 127 target. That stands at 55, almost $56. So that's why we think that maybe minor retracement here could happen, but later market should continue move higher. In the larger picture, even in a greater picture, you could see, you can recognize here the great head and shoulders pattern. So, and how you just could not pay attention to the commodities, guys. This is really amazing. It's really big stuff, the strategical pattern, because it stands at the all-time lows at 27 bars. As you can see, it's very nice picture on the WTI. So it's even better picture. The shoulder stands a bit lower, so here they're a bit small, but overall shape you could see it's very nice, especially it's a couple of the butterflies forming here. It's just cool stuff. So that is the background of our view on the Canadian. So we need to take a look at the Canadian dollar from the perspective of these patterns that we have on the crude oil. Now let's take a look at the daily Canadian. On the daily Canadian, we see a couple of important moments. That's our butterfly that we have discussed a couple of months ago. It stands still valid, but as you can see, this action has become a bit slower. But on the current week, we see great rebound up from the monthly pivot point. So you can see very fast action yesterday. It's a very fast rebound. It's very important. And take a look here, around 134 area, we have important targets. First of all, this is A, B, C bottom, 100% target, and it hasn't been completed yet. Market stands very close to it. As we know, market very rare left untouched targets. It's usually, if it already stand on the way to it, it usually should test it, reach it, and after that turn to some other action, either to the upside or it will be reversal. It's not really important for us. What we would like to get is reaching 134 area. Also, guys, this will be 127 extension of the butterfly. That's still valid. Yes, action is a bit slow, but butterfly is still valid. And this will be daily overbought. This will be very strong resistance. So mostly why we are talking about this setup is that we have a completed target that market is gravitating to. So that's why that makes us think that this direction and the direction on the crude oil leads market to the same point to complete the patterns that we have. But how use this rally for safe entry? And for that purpose, we need to take a look at the Canadian 4-hour time frame chart. Here, guys, we have perfect upward thrust, and all that we need to do is just to wait for the bread and butter. Double repo hardly possible here because we expect the upward continuation. Market is not at overbought. Market is not at some strong resistance. That's why probably we should get not the double repo but bread and butter buy. As soon as we will get the bread and butter buy, we could use it for taking the position and upward continuation. It's approximately 200 pips potential for that trade. It's not really small. That's what we'll be watching for. Also, it's interesting what has happened here. So we'll take a look at the hourly chart. You can see a great reversal pattern. It was the 1618 butterfly, and what's more interesting, take a look at this railroad track. Some kind of the real rejection of price. So market has trumped lower and immediately returned it back up. So this is very important sign of the upward reversal and the pairing of the butterfly, of course. So very nice picture, as you can see. That is how we combine the commodity market with the forex market and how they confirm each other. This is very important, and this is really could bring you more confidence with your trading if you see this supportive setup on the commodities and relation commodities market. That being said, as you can see, on the Canadian dollar we have a very nice setup. So just let's wait for some bounce down, some retracement, and take this possibility for taking the long position. As a result, upward continuation, market also should complete the double repo sell pattern on the crude oil market. So let's see how it will turn.